Hi, welcome to Pauline Young's channel. If you like our videos, please click the like and the subscribe buttons. In this video, we are going to talk about the top 5 sectors to invest for the 2021. Sectors do perform differently at the various points in the overall economic cycle. Some sectors do well in the bull markets, but poorly in the bear markets, while others can grow earnings even during the sluggish periods and the recessions. If you have invested in the index component blue chip stocks, you would probably see your portfolio didn't grow as much when compared to those who have invested in the right sectors, such as the healthcare and the technology sectors. We believe that those sectors that performed well in the 2020 will most likely be carried forward to the 2021. So, let's take a look at the sector's performance 2020. There are a total of 13 sectors in the Bursa Malaysia, and there were only 4 sectors that had positive growth. There were the healthcare sector with a whopping gain of 286%, followed by technology with 81.6% and industrial products and services gained by 17% and transportation and logistics with a gain of 4.9% for the year 2020. We all know that 2020 was a recession year with an annual GDP expected to contract by more than 5%. If you happen to invest mostly in the energy, REITs and property sectors, your portfolio will suffer a double-digit decline for last year. So do you see how important it is to invest in the right sector so you could grow your portfolio to preferably double-digit growth? Hence, in this video, we will identify the top 5 most promising sectors to invest for 2021. The first sector to invest for 2021 is the healthcare sector. Why should you choose healthcare sector? As you can see, the healthcare sector had a fantastic growth of 286% for 2020. So, will it continue its growth for 2021? We believe the healthcare sector is a medium to long-term play. Hence, you may not want to chase after the high price at this moment, but given that if there are opportunities of the retracement, you could slowly add your positions in this sector. The following are the reasons why we like healthcare stocks. First, healthcare is a play on demographic and an aging population. And number 2, the pandemic sheds light on the importance of healthcare to national security. And also, MedTech offers the ability to blend technology with healthcare and drive future growth. And healthcare earnings have the potential to hold up in economic downturns while displaying less volatility. There are opportunities in the healthcare sector. 65 billion ringgit COVID-19 fund to cover under Kita Prihatin package. Also, 3 billion ringgit to acquire COVID-19 vaccine supplies through the participation of the COVID-19 Global Access Program. And there's a 1 billion funds to aid allocation to curb third wave of COVID-19 includes the 475 million ringgit purchase of the reagent supplies, test kits and consumables, 318 million ringgit for the PPE and the hand sanitizers. So the subsectors involved in Bursa Malaysia will be the healthcare equipment and services, the pharmaceuticals, biotechnology, and life sciences. We had done a video on the healthcare stocks, and if you want to know which are the Bursa Malaysia healthcare related stocks, please click the video link at below. The second sector to invest is none other than the technology sector. We had done a video on the 5G stocks. If you want to know more about the Bursa Malaysia 5G related stocks, please click the video link at below. Here, we will tell you why we think the technology sector is still a very attractive sector to invest. Technology stocks offer investors a lot of opportunities. In fact, the sector offered the second highest returns of the Bursa Malaysia market sectors at 81.6% in 2020. Technology is an exciting space that includes trends from artificial intelligence (AI) to smartphones, blockchain, self-driving technologies, the ongoing trend to software as a service (SaaS), the Internet of Things (IoT), streaming media services, and more. It's an area full of opportunities but also with some risk. What are the opportunities in the technology sector? 2019 Malaysia top 5 exports items. As you can see, the electrical machinery and equipment accounts for 34.4% of the Malaysian total exports in 2019. This indicates that the technological sector is an important driver for the economy. In addition, digital infrastructure, 7.4 billion ringgit for the Malaysia Communication and Multimedia MCMC to build and upgrade broadband services in 2021 and 2022. There's also the 1.5 billion ringgit Jaringan Prihatin program to alleviate financial burden of the B40 accessing internet. Also, there's the 500 million ringgit to implement National Digital Network Initiative Jendela to ensure connectivity in 430 schools in Malaysia. Malaysia also in an effort to digitize the economy. Digital adaptation. 1 billion ringgit for the industrial digitization transformation extended until 31st of December 2023. And there's also the 500 million ringgit High Technology Fund provided by the Bank Negara to support high technology and innovative companies. There's also the 27 million ringgit to increase country cybersecurity. Sectors involved will be the semiconductors and semiconductor equipment, electronic equipment, instruments and components, software and hardware services. Technology can be categorized into 4 categories. First is the software and services. The software and software services industry includes businesses concerned with the development, maintenance, and publication of the software products. Number 2 is the technology hardware and equipment. Technology hardware and equipment is broken down into 3 industries: communication equipment, technology hardware, storage and peripherals, and electronic equipment, instruments and components. Third is the electronic equipment, instruments and components. Companies that produce electronic components including transformers, electronic capacitors and resistors, electronic coils and connection devices. Fourth is the semiconductors and semiconductor equipment. Semiconductors are substances that can conduct electricity under some conditions, but not others, making them ideal for controlling electrical currents. Silicon is a material that is frequently used as a semiconductor. In a separate video, we will look into the Bursa Malaysia stocks that are related to the above technology sectors. The third sector to invest in 2021 is the industrial sector. Last year, we saw an increase of 17% of this sector in Bursa Malaysia, and this year, we believe this sector will continue to do well. In this video, we will focus on explaining why this sector is attractive, and in the next video, we will introduce the Bursa Malaysia stocks that are related to this sector. Compared to other sectors, stocks in the industrial sector are relatively easy to read. That's because the vast majority of these stocks are cyclical, meaning they are heavily related with the economic growth. Therefore, when the economy is booming, industrial stocks are a great place to be. When economic conditions start to falter, it's time to sell industrial and look into other investment options. The correlation between the industrial sector and economic performance makes it easy for beginner investors to plan entries and exits. For example, as the COVID-19 pandemic set in and the economy reacted, investors knew to sell industrial stocks. However, when an announcement was made that a coronavirus vaccine had resulted in strong clinical data, industrial stocks climbed as investors began to expect economic improvements. Most of the big players in the industrial sector have a long history in business. Many of them are decades or even more than a century old. Investing in companies that have been around a long while gives investors an opportunity to analyze the company from a historical perspective. If a company has created consistent growth for the past 70 or 80 years, there's a good chance continued growth is ahead. Industrial sector is divided into 2 subsectors. The first subsector is called the capital goods. Capital goods are physical assets that a company uses in the production process to manufacture products and services that consumers will later use. And the following are the industries of the capital goods subsector: the industrial conglomerates, the machinery that includes the construction machinery and heavy trucks, the agricultural and farm machineries, and the industrial machineries, and also the trading companies and distributors. The second subsector is the commercial and professional services. Professional services are occupations in the service sector requiring special training in the arts or sciences. And the following are the industries of the commercial and professional services subsector. The commercial services and supplies that include commercial printing, environmental and facilities services, office services and supplies, diversified support services, security and alarm services. We also have the professional services that include human resource and employment services. And there's also the research and consulting services as well. The opportunities for the industrial sector are 1 billion ringgit for high technology and high value-added investment incentive packages. The Penjana special tax incentives to attract foreign direct investment (FDIs) to relocate their manufacturing facilities to Malaysia from 2021 until 2022. The 2.5 billion ringgit to contractor G1 to G4 for small and medium project. Northern Corridor Economic Region (NCER), construction of infrastructure and related components of Special Development Zone Project Yen and Baling, Kedah. Iskandar Region Development Authority (ERDA), Johor. Rapid bus transit at 3 high-capacity route and construction of busway. East Coast Economic Region (ECR), construction of the Palembang Bridge to Kota Baru. Sarawak Corridor of Renewable Energy (SCORE), infrastructure projects in Samalaju Industrial Area. Sabah Development Corridor (SDC), continuation of Sabangar Bay Container Port Expansion Project. The fourth sector to invest for the 2021 is the transportation and the logistics sector. The transportation and logistics sector last year saw a 4.9% annual gain in the Bursa Malaysia. It is one of the 4 positive sectors for the 2020. We believe this sector will continue to do well this year because of the following reasons. Number 1 is the recovery from the pandemic. The transportation and the logistics stocks were one of the worst hit in the stock market. As global demands all over the world fell, so did transportation stocks. With lockdown orders in place, you would not be able to move around much. The pandemic had grounded businesses and essentially halted cross-country traveling overnight. The wrath of the pandemic had affected top transportation stocks from the airline industry to the service industry. So as we are looking at mass vaccination by the first half of the year, economy should recover, and so as the transportation and the logistics sector. We also see opportunities in the COVID vaccine cold transportation that will benefit some logistic companies in the Bursa Malaysia that we will cover in the next video. And also with the ease of travel restrictions after the vaccination that will promote this sector's growth as well. The second reason is the budget 2021. Below are the 2021 budget announcement that will add value to this transportation and the logistics sector. Iskandar Regional Development Authority (ERDA), rapid transit bus transport system at 3 capacity routes and construction of busway. Agro-value food chain modernization, 150 million ringgit for stage bus service transformation, 150 million ringgit for vessel modernization and capture, exemption from HRDF levies for 6 months. We will cover this sector in our next video. The fifth sector to invest for 2021 is the utility sector. Why invest in the utility sector? Although this sector had a contraction of 1.6% for 2020, but we include this sector on our list is because number 1, it is a stable investment. Utilities are stable investments that provide a regular dividend to shareholders, making them a popular long-term buy and hold option. Dividends yields are usually higher than those paid by other stocks. During times of economic downturns with low interest rates, such stocks become attractive. Number 2 is the growth opportunities in renewable energy. The government is seeking to increase the country's target of renewable energy generation to 20% by 2025. Here are the opportunities in the utility sector. The Malaysia's Green Energy Initiative, Green Investment Tax Allowance (GITA) project until 2022, implementing enhanced net energy metering (NEM) and solar leasing, implementing large-scale solar program 3 (LSS3), implementing non-solar RE project, example biogas and mini hydro, and the Malaysia Sustainability. Also, there's a Rural Development Initiative, which is 632 million ringgit for water supply in rural and alternative water supply with a target of 4,800 houses, and also 250 million ringgit for rural electric supply with a target of 1,100 houses. There's also a 121 million ringgit for installation of 27,000 lamps, as well as cover and maintenance costs of 500,000 in villages. So the related industries would be the multi-utility, electric utility, independent power and renewable electricity producers utilities, and the water utility. If you would like to know more about the green energy, please refer to our previous video at the link below. If you notice, banking and consumer sectors were not on our list for 2021, although they were the traditional blue chip stocks in every investor's portfolio. That's because in the current low-rate environment, banking stocks are under pressure to perform as their profit margin is squeezed. As the pandemic sees no sign of slowing, we might see more people may lose their jobs and corporate may have difficulty in paying down their debt obligations. So this will cause a spike in the bank's non-performing loans. And for the consumer sectors, although it is a defensive sector, however, we see the growth is quite stagnant due to the low purchasing power of consumer as economy is still weak. However, even though the banking and the consumer sectors were not in our list, but we maintain a neutral stance in them because the dividends provided by these sectors are indeed very suitable for long-term investors who like to go for the income stream rather than the capital gain. The above analysis is for information purpose only, and we do not initiate a buy call or a sell call. At the point of recording, we do not hold any of the stocks mentioned in this video. Thank you.